The sheer size of the Chinese internet market makes it an attractive target for venture investment, despite the risks. But there are big differences between investing in China and investing here in Silicon Valley. Joining me now are two prominent venture capitalists who both got their MBAs right here at Stanford. Tim Chang, now at the Mayfield Fund, and Richard Lim, managing director at GSR Ventures, a firm with investments ranging from consumer internet to clean tech. Both of you guys have focused on China, so really great to have you here on Bloomberg West. Let's talk a little bit about the China bubble, the China internet bubble. We know that Renren and several other Chinese internet stocks have really plummeted over the last few months. Has the China internet bubble popped? Tim, let's start with you.
Well, I'll give my view. If we define bubble as being able to go public on no sight of profits on the horizon and just applying big multiples on constant top-line revenue growth, then yeah, I think it's popped. I think the market's a lot harsher on what it takes to go public. You can't just say, we're growing 100% year on year. We'll figure out profits someday. I think investors want to see transparency. They want to see a quality business model that doesn't take tons and tons of cash and ongoing marketing and loss of profits in order to go public these days.
So you think Renren shouldn't have gone public?
Well, Renren might have scale to go, but now the pressure's on to deliver numbers on the bottom line, not just the top line. I think that's what we're seeing a shift towards.
Richard, what are your thoughts on this?
Chinese companies, tech companies, have gone through 3 cycles since 2003. So 2003, Ctrip went out at a modest multiple, traded up rapidly. Baidu went out, traded up, roughly 2 to 3x on the IPO, and it went up and up and up, and then we hit Alibaba. Right? Alibaba went out, traded up to $20 billion, is now 5, right? And the bubble popped and it went down and nothing happened for 2 years. And then the cycle started again. So this last cycle started with Youku, which is back in roughly Q4 of 2010, and was priced off 2013 earnings, a multiple of 2013 earnings in 2010. And it traded up very rapidly to 100 times 2013 earnings, right? And everything got priced off that. And Renren was the last company to get out at the peak of that euphoria, and then it came down again. But the underlying growth still remains. And and some period of time, give it 6 months or a year, when the pricing becomes more moderate, we will see companies going out again.
We'll be talking to Joe Chen, CEO of Renren, later in the program, and I am going to ask him about this. But what do you look at, Tim, as the risks of doing business in China? We've been hearing about this accounting fraud issue that U.S. regulators are looking into. You, as a venture capitalist, how do you manage those risks and balance risk versus reward?
A lot of it is the type of entrepreneurs you back and their own mentality and approach towards transparency and reporting. What I tend to look for myself, if possible, are folks who actually learn some corporate governance best practices, even in Western companies if possible. So the ideal is somebody who may have spent a couple years in a Google China, or graduated from Tsinghua but then got an MBA from Stanford or something like that, and maybe was trained in the West. To me, in my experience, they've had more appreciation for what a board of directors is there to do and how to work together with them, and that corporate governance is a little more familiar to them. So that's kind of something I seek. If it's truly a local entrepreneur I've never met before and have no mutual business contacts in common with, it's probably a lot harder to assess that sort of framework.
Now, Richard, GSR is an investor in Lasho, which is the Groupon of China, which actually seems to be doing almost better than the Groupon of the United States. There's talk it could IPO soon. Give us the status on Lasho.
The group buying market in China has grown faster than the group buying market in the United States. It started a year after the United States market, and by most accounts is approximately almost the same size as the group buying market in the United States now, and growing substantially faster. There are different characteristics. Lasho is is the largest company in the space. By some metrics 2x, by some metrics as much as 4x larger than the next largest player in the space. And Groupon, like all other US internet companies, has been spectacularly unsuccessful in China.
Exactly, Tim. The Groupon's joint venture in China is struggling. Zynga, for whatever reason, hasn't seemed to be able to crack the Chinese market either. Why haven't U.S. companies been able to succeed in China?
Well, for one, it's a very different market there. We've got a great firewall, which blocks off sites, so if you're not blocked, then you can't even access the site. But more importantly, historically, no U.S. internet companies ever successfully penetrated China. And I'll go out on a limb and I'll say none ever will. It's a different market, the local requirements are different, and it creates a lot of room for startups to create the parallel sort of universe of big companies over there. And that's why I think Richard and I are still bullish on the market, despite the risks in the short term. Long term, it's a good place to bet.
That's quite an assertion there. No U.S. internet company will ever succeed in China. Many thanks to Tim Chang of Mayfield and Richard Lim of GSR Ventures. We'll be